In this video, I'll be giving you an update on my long-term dividend stock portfolio that I've been building since January 2020. Stay tuned as I show all my new buys, my dividend income, and all 50 of my stock positions. My name is Zach, and you should leave a like and subscribe to the channel if you enjoy the video. On this channel, I will be sharing my investment journey as I build my dividend stock portfolio. Every month, I'll be doing a full breakdown of my portfolio, and every week making other investing videos. So let's get down to business. So in this summary table, we can see that I've invested $34,743.43 and have a current value of $32,780.04. So at the moment, I'm down $1,963.39. This loss is primarily due to the economic shutdown, but I remain confident that my portfolio will be back in the green soon enough. However, I'm not overly concerned with the current value statistic, as my portfolio is long-term focused and the primary goal is to optimize dividend income. So the most important statistic of my portfolio is the dividend yield on cost. My dividend yield on cost is 4.609% and my compounded dividend yield is 4.646%. Over time, you'll see the gap between my compounded yield and my standard yield increase significantly. This is because the reinvestment of dividends increases my yield at no additional cost to me. So over time, my yield will increase dramatically, not to mention the dividend increases themselves. Since my last update, I've invested $1,803 more into my portfolio, and I'll go through each of my buys right now. I bought one share of Consolidated Edison at $71.88. This gave me a 4.25% dividend yield. I bought another share of Consolidated Edison at $71.13. This is a 4.3% dividend yield. I bought one share of 3M at $143.66. This is a 4.09% dividend yield. I bought one share of FRT at $69.11. This is a 6.07% dividend yield. I bought one share of Coca-Cola at $45.54. This is a 3.6% dividend yield. I bought three shares of DXC Technology at $15.39. This is a 5.45% dividend yield. I bought two more shares of Coca-Cola at $44.25. This is a 3.7% dividend yield. I bought another share of FRT at $71.53. This is a 5.87% dividend yield. And then I bought another share of FRT at $70.32. This is a 5.97% dividend yield. Then I bought one share of Realty Income Corporation at $51.03. This is a 5.48% dividend yield. Then I bought another share of 3M at $140.20. This is a 4.19% dividend yield. I bought four shares of AT&T at $28.59. This is a 7.2% dividend yield. Then I bought three more shares of DXC Technology at $15, which is a 5.6% dividend yield. Then I bought two shares of Leggett & Platt at $26.32. This is a 6.07% dividend yield. Immediately followed by me buying two more shares of Leggett & Platt at $25.02, which is a 6.39% dividend yield. Then I bought one more share of Realty Income Corp at $50.35. This is a 5.56% dividend yield. I bought two more shares of Coca-Cola at $43.67 at a 3.75% dividend yield. I also bought two more shares of FRT at $67.90, which is a 6.18% dividend yield. I bought one share of IBM at $116.30. This is a 5.6% dividend yield. I bought one more share of Consolidated Edison at $70.05, which is a 4.36% dividend yield. I bought one more share of 3M at $136.75, which is a 4.29% dividend yield. I got two more shares of Leggett & Platt at $24.37, which is a 6.56% dividend yield. Finally, I got one more share of AT&T at $28, which was a 7.4% dividend yield. All of these buys were at great prices, which lowered my cost per share and increased my dividend yield. It also helped me gain a stronger position in stocks that I wanted to build up. My estimated dividend income is $1,612.92. And as you can see, the income for each month kind of operates in cycles. For example, the estimated for May is $68.83. In June, $179.51. In July, $158. In August, $68 again. And you can see that it just kind of repeats in that general pattern. This is because most dividends are quarterly, so they end up in cycles like that. However, I do own some monthly and semi-annual dividends. The dividend income is allocated with the energy sector being the largest at 24.5%, real estate at 15.2%, consumer defensive at 14.7%, financial services at 9.8%, communication services at 7.7%, industrials at 7.6%, consumer cyclical at 7%, materials at 4.8%, healthcare at 3.8%, technology at 3.38%, and utilities at 1.35%. So right now, most of my income is coming from energy, real estate, and consumer defensive. Over time, I would like to spread this out more so my income is safe across multiple sectors of the economy. The real dividend income is delayed from investment as you have to own a stock when they declare their dividend in order to receive that payment. So in May, I received $72.51, which is down from the $86.90 I got in April. But this is expected as May is my lowest month in the cycle shown by the estimated dividends chart. So here you can see the growth of my portfolio over time. Since January, I made this account exclusively for dividend stocks. I've consistently invested in this time both prior to the market downfall and during. Closing out May, my portfolio has a value of $32,862.18. Here you can see my portfolio's cost allocation by sector. Energy is 18.2%, industrials is 16%, real estate is 14.7%, consumer defensive is 9.62%, financial services is 9.6%, consumer cyclical is 8.29%, communication services at 7.6%, materials at 5.56%, healthcare at 4.58%, technology at 3.75%, and utilities at 1.96%. Notice the difference between the amount of money invested in the industrial sector and the amount of dividends it produces. This difference is due to the failure of GE, which is a holding I've had for many years, and it cuts dividend down to a penny. I'll be sure to go into more detail about this later in the video. I hope to balance out my sector allocation over time. My primary goal right now is to build up larger positions in quality stocks no matter what sector they're in. So here in the energy sector, you can see that ExxonMobil is my largest position. I've invested nearly $2,000 into it, and I currently have a 6.15% dividend yield. My cost per share is $56.59, so I could be looking to lower my cost per share at the moment, but right now I think my money is better put elsewhere. My second energy stock is Chevron, and I have nearly $1,500 invested in this with a 5.1% dividend yield. Again, my cost per share is higher than its current price, but I'm not too worried about it because I feel like I have a good amount of money already invested in both Exxon and Chevron. And then I have Enterprise Products and Occidental Petroleum. I'm currently not trying to buy any more of these because I feel like I have a large amount of money invested in oil companies. However, in the energy sector, I am looking to increase National Fuel Gas Company and UGI Corp. These are natural gas companies and they have been increasing their dividends for many years. Personally, UGI Corp is the one I want to increase more, and I currently have $563 invested into it at a 3.51% dividend yield. The reason why I'm looking to buy more of this right now is because I have a good chance to lower my cost per share and increase my yield. So as you can see, Exxon and Chevron are my two top holdings in the energy sector, and I feel comfortable with that, but I do want to diversify more into the natural gas section of energy. So I'm really looking to get NFG and UGI ahead of EPD and Occidental. In the industrial sector, my top holding is 3M, which has about $2,700 invested in it. My dividend yield is 3.943%, and I have a cost per share of $149.11. I will definitely be looking to lower my cost per share here so that I can have my dividend yield over 4%. But right now, the current price is $156, which is over my cost per share, so I won't be buying more unless it gets below. I'm definitely looking to make 3M one of the staples in my portfolio, and I've made an entire video analyzing and going over the history of the stock. The link will be in the description. My second position is General Electric, which is something I've owned since 2018 and has turned out to be one of the worst investments I've had. They've cut their dividend to a penny a quarter, but I'm holding on to it at this point because I think they're starting to turn the corner and may be at the point where they can increase their dividend again in the coming years. But I'm certainly not buying any more General Electric at the moment. And then my other holdings are A.O. Smith Corporation and Emerson Electric. I'm comfortable with where A.O. Smith is at right now, and I'm not really looking to buy more of it. However, I would be looking to get more Emerson Electric if I can get around my cost per share. So as you can see, 3M and General Electric are the two big dogs in this sector for me. Over time, I'm looking to get 3M to be 60 to 70% of this sector and have Emerson Electric be my second highest holding. In the real estate sector, my holdings are Federal Realty Investment Trust, Welltower, Realty Income Corporation, Tanger Factory Outlets, and Iron Mountain. FRT is my top holding with $2,360 invested. I have a 5.337% dividend yield, and my cost per share is $78.69. I'm extremely happy with this position as this kind of yield is once in a lifetime opportunity for FRT. They usually hover around a 3% dividend yield, and I've made an entire video about why I think FRT is one of the best value dividend stocks right now. The link will be in the description below. I have $1,200 invested in Welltower and have a 5.249% dividend yield. My cost per share is $47.02, which is below the current price of $50.67. I'm not necessarily looking to buy more Welltower right now, but if the price is enticing enough, then I'll probably buy some. The next highest stock in the sector is Realty Income Corp, which is a monthly dividend. I have $781 invested in this at a 5.763% dividend yield. I'm definitely looking to get more Realty Income Corp and have it be close to Welltower, if not above Welltower in my portfolio. Next is Tanger Factory Outlets and Iron Mountain. I'm not looking to invest any more money into these right now, but I'll still be holding them. So as you can see, Federal Realty is my largest position of this sector at 46.1% of my costs, followed by Welltower and Realty Income Corp. And as I mentioned earlier, my only real goal here is to increase Realty Income Corp, but I will be buying more FRT and Well if the prices are good. In the financial services sector, my positions are United Bankshares Incorporated, Invesco, Franklin Resources, Mercury General, and People's United Financial Bank. UBSI, Invesco, and Ben are my largest holdings. In UBSI, I have about $1,100 invested at a 4.4% dividend yield. I have $1,000 invested in Invesco and have a 4.899% dividend yield. I'm not looking to pick up any more Invesco at the moment because they recently cut their dividend and I'm in a wait and see mode for them. I have about $900 invested in Ben at a 4.83% dividend yield. Right now, I'm not looking to buy any more of these stocks because I haven't exactly fallen in love with any of them, and I'm trying to focus on ones that I know are quality buys at the moment. So as you can see by the distribution, I have about 30% UBSI, 30% Invesco, and about 30% Ben. And I'm comfortable with this distribution right now. In the consumer defensive sector, I have Coca-Cola, Kraft Heinz, Altria Group, B&G Foods, Universal Corp, PepsiCo, and Tootsie Roll Industries. My top holding is Coca-Cola, and I currently have $791 invested at a 3.73% dividend yield. I feel really good about the long-term prospects of Coca-Cola, and I made an entire video talking about it, and the link will be in the description, same as the others. My next holding is Kraft Heinz, and I have $650 invested in that at a 6.3% dividend yield. I would certainly be looking to pick up more Kraft Heinz, but the price is above my cost per share at the moment. My next holding is Altria Group, which I have $620 invested in. I have an 8.7% dividend yield with Altria Group, and this is another stock I feel very comfortable with at the moment. Next is BGS, which I have $620 invested in. This investment has turned out very well as my cost per share is $15.59 and it's gone up since then to $23. But the best part is that it's a 12.47% dividend yield and there's no indications that they will be lowering their dividend anytime. Next is Universal Corp, which I have $500 invested in and a 6.14% dividend yield. Next is PepsiCo, which I have $108 invested in at a 3.78% dividend yield. PepsiCo is one that I'm definitely looking to increase my position in, but the problem is that it's been trading relatively high to its historical prices and hasn't really fallen that much other than when I bought it it during the crisis. I have one share of Tootsie Roll, but as you can see, the yield is so low that I'm really not looking to put more money into Tootsie Roll at the moment. In this sector, I feel comfortable with pretty much all my positions, and other than BGS and Tootsie Roll, I'll be looking to increase my holdings in all of my other stocks. My main goal here is to continue increasing Coca-Cola and massively increase my position in PepsiCo. In the consumer cyclical sector, I have Sunoco Products, McDonald's Corporation, Genuine Parts Company, Leggett & Platt, and the Waco Group. Sunoco Products is my top position at $820 invested and a 3.16% dividend yield. I feel comfortable with this, but I'm not looking to buy more of it at the moment unless a very good opportunity arises. Next, I have McDonald's with $720 invested and a 3.4% dividend yield. I am looking to pick up a lot more McDonald's, but the current price is so much higher than my cost per share. If the stock falls at all, I'll probably buy more if it's above a 3% dividend yield. I have $603 invested in Genuine Parts Company at a 3.7% dividend yield. I feel good about this, and I'm not looking to buy more unless the price is very tempting. Next, I have Leggett & Platt, which I have $450 invested in and a 6.26% dividend yield. If it gets back around my cost per share, I will definitely be looking to buy more of this and make it one of my larger positions in this sector. Next, I have Waco Group with $270 invested, and I'm not really looking to increase this position anymore at the moment because I'm trying to allocate my money into different stocks right now. So my main goal here is to get Leggett & Platt to be at least top 3 in this sector for me. In the communication services sector, I have Walt Disney, AT&T, Telephone and Data Systems Incorporated, Meredith Corp., and Verizon Communications. Disney is my top holding with $875 invested. I currently have a 1.82% dividend yield. I'm not really looking to pick up more of this right now because the current price is way above my cost per share, and they temporarily suspended their dividend recently. I have $835 in AT&T at a 7.25% dividend yield. AT&T is a stock that I'm trying to massively increase investment into. I without a doubt want it to be my top stock in this sector and would like to actually get it in the $2,000 range, so it's around 3M and FRT. Other than that, Verizon is the only other stock I'm looking to buy more of at the moment here. It has a good yield, but the price has been above my cost per share for a while now, and I might just bite the bullet at some point if it gets around $53 or $54. So as you can see, my goal is to get AT&T to well over 50% of this sector, as well as increase Verizon's position to 25% or so. In the materials sector, I have Scott Miracle-Gro, Nucor Corporation, and Dow Chemical. I have about $1,000 invested in Scott Miracle-Gro, which gives me a 2.61% dividend yield. I've had this stock for a long time, and as you can see, my cost per share is well below the current price. So I'm not necessarily looking to pick up more of this right now, but I think it's a good long-term hold for me. Next is NUE, which I have $711 invested at a 3.649% dividend yield. I'm definitely looking to pick up more of this because I feel like recycled steel is a good business to be in. This is a company that will be around for many decades to come. Next, I have Dow Chemical, which I have $224 invested in, and it has a really good yield. But I want to do more research before I feel comfortable putting a lot more money into this. So here, I would say my goals are to get Nucor to 50%, and Dow Chemical to 25% while keeping Scott Miracle-Gro around the same value. In the healthcare sector, I have Pfizer, Walgreens, and Johnson & Johnson. Pfizer is my top holding with $824 invested and a 4.27% dividend yield. I will be looking to get more Pfizer if it's below my cost per share. Next is Walgreens, which I'm not really looking to buy more of right now, but is definitely going to be a long-term hold. Finally, Johnson & Johnson, I have $250 invested in. I would like to massively increase my Johnson & Johnson holding, but the issue is that the current price is very high, and I would like to buy it at above a 3% dividend yield. So here you can see by the cost allocation, I'm fine with Pfizer being my top position, but I would really like to see Johnson & Johnson jump over Walgreens in my holdings. In the technology sector, I have IBM, Leidos, DXC Technology, and Cisco Systems. IBM is my top holding, and I have $593 invested at a 5.489% dividend yield. I'm okay with this being my top holding, but I'm not really overly excited about any of these technology stocks in my portfolio. Ideally, I'd like to add Microsoft or Apple into it, but they have been soaring at such high prices that it hasn't been a good buying opportunity recently. Next, I have Leidos, which I have $300 invested in. I bought this stock because I had an internship there and I wanted to feel like I had some skin in the game. And I would say the most interesting one in this sector for me is DXC Technology, which I have $240 invested in, and a 5.25% dividend yield. This one is interesting because they have an extremely low payout ratio and a lot of room to increase their dividend over time. But I really want to do more research into the company as a whole so that I have a good broad-based understanding of how they are faring long term. So here I'm fine with how the distribution is currently, but really over time I would like to get Apple and Microsoft into this and have them be larger positions in this sector for me. In the utility sector, I have CenterPoint Energy and Consolidated Edison. CMP is my larger holding with $400 invested and a 2.426% dividend yield. I'm not looking to pick up more CMP right now because of the fact they lowered their dividend. However, I am looking to buy more Consolidated Edison. Right now I have $286 invested at a 4.27% dividend yield. My short-term goal is just to hop it over CNP and have it be my top position in this sector. To round out the video, I thought I'd share what I'm planning on buying, which is FRT, T, KO, 3M, O, MO, LEG, and UGI. However, I'll be keeping my eye on all the stocks on my watch list to see if any good deals arrive. Thank you for watching the 6th video of Dividend Data, and I'd love if you could show some support by subscribing to the channel and liking the video. I'll be giving you an update on my portfolio every month and making videos like this every week. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends. Leave a comment below, and thank you for watching.